Welcome to this video analysis of 29th of September. The trading month of September so far has seen lots of dollar bullishness. And as the month is nearing its completion, how will October look like? NFP will be certainly an event on Friday the 3rd to keep an eye on. More on that in just a second. Before we continue, this disclaimer explaining that trading for exchange here and this video analysis is not intended for everyone and not suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com. Also, trading for exchange is considered high risk and it may not be suitable for all traders. Please seek the advice of an independent financial advisor for more information on that. This video analysis is for educational and informational purposes only, and I thank you for your attention. Before we start looking at my charts, this webinar schedule for this week, as always, weekly FX recap on Mondays, Tuesday, Wednesday, Thursday morning live trading labs, and Thursday evening pro learning lab, new methods on using support and resistance to the max. I look forward to seeing you in one or all of these webinars very soon. Let us start with the euro dollar. This is the monthly chart because tomorrow is the last day of trading in the month of September, and sooner or later we will have, of course, monthly candles to look at. And assuming, of course, we have still some time left before this monthly candle is finished, but at its current view, it looks very bearish. Pretty big monthly candle on the euro dollar, 500 pips, an acceleration of the bearish candles we already saw previously in the prior months to this month. So it looks like a continuation of euro dollar weakness and dollar strength. There is an important support level, 127.40, but price is pushing through it as we speak and breaking that support. There's also maybe a smaller support right in here, but basically these should be just minor, if at all, bouncing spots for further downtrend continuation. This is looking very bearish. The break of the rising wedge indicated by the green lines is happening very strongly and without any pause. And you can see that that green rising wedge most likely finished a 5-wave triangle basically that finished part of a correction like this, and the euro dollar seems set for that fall following this pattern basically of an ABC, with the B being a contracting triangle and this being the A, B, and downwards for C. So targets in the meantime, of course, could be the bottom of this triangle here, but if we break the bottom, if we break the trend line, we could even go to lower levels like 1.1, 1.13, maybe even parity, but that of course is just an analysis. For now, price is looking bearish. Any upside would probably seem like a retracement for further downside down to what I would consider the minimum target of the bottom of the purple lines. The same story on the pound dollar. This is the daily chart, and here too bearish momentum, very big fall, and price made a substantial rally here, but that could easily be retracement. And now price is breaking through the green support line here, right where I have the cursor as well, and price seems to be breaking now to newer lows. It maintained the lower highs. It just had one higher low here on recently, but that price seems to be corrective and seems to be ready to break now to the downside. And you can see if we put a fib, for instance, on this particular move, price respected a 78.6 fib, and price could be headed towards the target of that, which is, for instance, 158.80 and 156.75. So they're bearish targets here, and a downtrend continuation, just like the euro dollar, seems very likely in my opinion. The odd USD, looking at the monthly chart, and although the character here is also bearish, the precise follow-through or configuration is a bit different because the odd USD has not been in a downtrend the last 5 months. In fact, price was going in a tight range sideways, whereas the euro dollar has fallen 1,300 pips, 1,350 in 4.5 months. The pound dollar has fallen 1,150 pips in 3 months. The odd USD actually didn't go anywhere and went sideways until the month of September. And the odd USD has caught up a lot of that downside gain basically quickly, because September month is down already 700 pips in just 1 month. Obviously a big candle, a very strong bearish candle, and I'm looking certainly for a follow through of that candle to the downside. One of the targets, for instance, that I'm keeping an eye on is 83.60 here and 77.60. One could even put a fib on this, and there could be some confluence between the minus 618 and the minus 272 target at around that 83.60 level. So price, any upside, once again here too seems like a retracement for more downside. Such a bearish candle would have a high likelihood of follow through in the month of October. Last but not least, the dollar-yen monthly chart. Here too, dollar strength dominating the currency pair, and the current candle of September is up about 550 pips, and is almost close to 600 in fact. So very strong candle. The upside trend has lasted about 900 pips in 3 months, and the first target is the minus 272 target at 111, with 110 being a psychological round resistance level. Eventually though, maybe even the minus 618 target at 120 could be in play as this dollar yen breaks out of about an 8-month consolidation indicated by the purple lines to the upside. Thank you for watching this video analysis. I hope to see you in one of the webinars this week again soon, and wish you all good trading and a very good week. Cheers.